Hello, everybody. Looks like we're back here, and fortunately was having some technical difficulties. I tested everything and it was working fine, but now we're here, we're live, and here to answer questions for you. Any questions you might have about money. Out here in the Midwest, I'm out here in the Midwest, and today we've got some interesting weather. It's like kind of a looks like hail almost, but it's like a frozen rain. So kind of interesting weather here today. But it was 70 degrees a few days ago. It's kind of a fun part of being here in the Midwest. You get summer, and then a few days later, it's like winter again. Anyways, my name is Nicholas, and I'm just here today to answer any questions you have about money. You guys could have asked ahead of time. There was a way to ask your questions ahead of time, and I did get some questions that people asked ahead of time. You can also ask live. There's a chat box if you're with me live right now, where you can type in your question about money, anything about personal finance. Just a little bit about me and my background. I had a career as a financial advisor for several years, helped manage over $40 million. And so obviously have a lot of experience working with people with their money. And eventually I got into teaching and teaching personal finance, teaching some other subjects as well in a school. And I also, one of my main things I'm doing right now is I have a company called Money 101 Academy membership. And that's where there's an online course. If you sign up for the monthly membership, there's an online course and some coaching, a place where you can just ask questions. There's an online community. So just a great place to learn more about money and stuff. So I might talk about that later, but let's get into your questions here today. And before we get to that, one last thing I want to say is, and I used to say this when I was a financial advisor as well, I did some teaching then, is that, I have a lot of experience, but I don't know your personal situation. So it's hard to really give advice if I don't know exactly what's going on with your situation. So obviously, if you need specific advice, it's good to talk with a tax advisor or financial advisor, or join the Money 101 Academy membership. But I am happy to just share with you some insights about what I can help with. So let's get to it here today. And so, question that was asked ahead of time by Laura: is it better to have a credit card or a debit card? This is a fairly common question I get from people. Is it better to have a credit card or a debit card? And again, it really kind of depends on your situation. For some people, the credit card is better. For some, the debit card. For some, both. Some combination of the two. Some of the pros of having a credit card is it's one way to develop credit history. So if you want to, credit history is basically showing people that you are trustworthy with when you borrow money, that you're going to pay it back. It's a number that is tracked there's 3 different agencies that track credit scores, your credit history. And when you use a credit card, you're really borrowing money when you use a credit card. You're telling Visa, for example, when you swipe that card at the gas pump, that you're going to pay them back, within the next few weeks, or by the end of the month, whenever your bill is due. And so when you pay that money back on time, you're showing that you are trustworthy with, saying what you're going to do. You're going to pay back that money. So credit cards are one way to develop a good credit history. You can't do that with a debit card. So if you ever want to borrow money to get a loan to buy a car or to buy a house, to get a mortgage for a house, you know, that credit score can help you get those things. Or student loan. I mean, it goes on and on. So credit cards, one good thing about them is you can develop your credit history there. Another good thing about credit cards is that you have typically better fraud protection. So if somebody steals your credit card, you're, you know, it depends on the card, but you're usually have very little liability for stuff that was chosen, if anything at all. As long as you're honest with the company, you know, call in your company that gave you the credit card and let them know what's going on. That can typically get taken care of if somebody tries to steal your credit card number or whatever. Credit cards, this has changed a lot. Usually it's pretty easy now to find a credit card where there's no annual fees. It's not always been that way. Credit cards, typically you have a potential for rewards is another thing that's a pro of credit cards. So it might be getting 2% cash back, for example, on all your purchases, or getting miles to fly on an airline. You don't get that with debit cards, but you do with credit cards. And I think so. Those are some of the main good things about having a credit card. Now, some of the challenges with a credit card, some of the problems with a credit card are probably one of the biggest is that some of us, we just have that bad habit of spending too much money, of just charging everything. And so unfortunately, some people get into a lot of trouble with not paying back what they've charged on their credit card on time. And so then now they owe a lot of interest, and the interest is very high on credit cards. Eventually, some people end up having to file for bankruptcy, or it takes them a long time to pay off the debt that they've accumulated from the credit card. So that's probably one of the biggest disadvantages of having a credit card, is that temptation to overspend. Another potential problem with credit cards could be fees. Like you might have to pay an annual fee. Again, that's not the case for all credit cards. And I'd say those are probably the biggest problems with credit cards, potential problems. Debit card, on the other hand, some good things about a debit card is it's much more difficult to spend what you don't have, because every dollar that you spend comes right out of your bank account. I'll take a quick drink of water here. So you can't really buy stuff that you don't have the money to pay for, which can be a good thing with a debit card. Looks just like a credit card, but if you want to swipe it at the gas pump to get some gas, that money's going to come right out of your bank account when you pay for that gasoline at the pump. A problem with debit cards is that the fraud protection is typically not as good. So if somebody does steal your debit card, they get your PIN, it can be harder to get that money back than if you have a credit card. So those are some of the main things to consider when you're choosing between a credit card and a debit card. I know some people out there say that credit cards are absolutely terrible and you should never get one. I think that's a little extreme. I would just say you have to know yourself, know your circumstances. Are you trying to build credit history? Are you able to have self-control without spending too much money? if you check those boxes, then maybe a credit card is something for you. So again, you have to kind of know your situation, and again, maybe it might help to talk to somebody you trust about money, or like a financial coach or a financial advisor, financial planner that can help you with that as well. So let's see here. Got any questions here? Chat box. Again, you guys can ask your questions here in the chat box. If you're here with me live, there's a place to just type in your question. Anything you want about, insurance, investing, personal finance, entrepreneurship. Okay, so looks like we have a question here from Aiden. If I'm self-employed, is it better for me to do an IRA or a SEP IRA? So if you own your own business, you have a lot of options of what to do if you want to put money in a retirement account. Both IRAs and SEP IRAs are retirement accounts. They're taxed differently than your standard investment. So for example, let's see if I got some stuff here, some business cards laying around here. So let's say both of these things here are investments. So let's pretend this is like some type of investment, maybe a mutual fund or a stock or a CD. So let's just say both of these are a stock. So for example, we have some, Chipotle stock here, Chipotle stock here. So you have an option. So if you just hold the stock, let's say you open a TD Ameritrade account, you buy the stock, you're making a dividend on that stock that, let's say Chipotle is paying a dividend. I'm not sure off the top of my head if they are. They probably are paying some type of dividend. Then you're going to pay taxes on this dividend, or if you sell it, you're going to pay taxes on the gains if it sells for more than you bought it for. So every year, let's say you hold on Chipotle for 5 years, every year you're going to pay taxes on these dividends on the stock. Okay, with me so far? So that's the first one. This is Chipotle. We did that, paying taxes every year. Now we have Chipotle stock, same thing, making dividends every year, but where's my coffee cup here? But we're gonna drop it into the retirement bucket. This is the retirement bucket. Drop it in. Okay. Now when it's in the bucket, something happens. It's going to be taxed differently. Are you still going to have to pay taxes every year on your dividends? No. Let's say this is a traditional IRA. First off, you're going to get a deduction on any of the money you put into your IRA, your traditional IRA. Then it's going to grow every year. Let's say you're making dividends every year and stock's growing, no taxes until you withdraw the money. So the tax code says you have to wait till you're 59 and a half without penalties. When you wait till then, when you take it out of the account, draw the money out, draw out your $50,000 out, put that into your bank account, then you're going to pay taxes on it. But the advantage is that all these years you've not had to pay tax, accumulate to a lot of money over time. So you can save a lot of money by using the retirement account bucket, whether it's a traditional IRA, a Roth IRA, or a SEP IRA, or 401k, whatever it is. So that's the main thing we want to get to here. So after that, you have option. When you talk about IRAs, an IRA is an individual retirement account, or I think technically the IRS says it's a individual retirement arrangement. But basically, a traditional IRA and a SEP IRA are very similar. They're so similar that actually you can roll a SEP IRA into a traditional IRA. And I've actually done this myself. So the biggest difference between a traditional IRA and a SEP IRA is the way it gets started. So a traditional IRA, anybody can do as long as you're making money. As long as you have income, you can put money into a traditional IRA. So if you're making $50,000, I think for 2002 it was like 6,000. It always every year tends to move up a little bit. So I think it was like 6,000 or 6,500 for 2002. 2023, I think it's bumping up a little bit. So you can put up to that amount into the traditional IRA. It will grow tax deferred. You won't pay taxes every year until you take the money out. There's a few other things to know, but there's a lot more to know, but that's the basic idea of a traditional IRA. A SEP IRA, you have to either own your own business or work for a small business. Your employer, or if you're the employer, you can open up a SEP IRA. Now, a SEP IRA, there's a few ways where it might make more sense. The first thing, biggest difference, is your contribution limits are quite different. Again, this changes every year, but basically it's the lesser of 25% of your income, or I think for 2022 it was somewhere like over 60,000. It's kind of high. So the lesser of those two. So let's say you're making $100,000 a year. The 25% would apply then. So the lesser of 60 something thousand, or 25%, is obviously 25% of 1,000 or 100,000. So that's 25,000. So the max contribution into a SEP IRA for this person would be 25% of $100,000, which is $25,000. So again, SEP IRA, for this person, it would be 25,000 limit. But if they're going to do the traditional IRA, it's like 6,000, 6,500, whatever it is, somewhere around there. So obviously you can potentially do more into a SEP IRA if you have more income. But again, if you're making 20,000 a year, then 25% is 5,000. So the traditional IRA, you can actually put in more if you're making a very low amount of money. The other big difference with SEP IRAs is who gets the deduction. So with so the employer is going to get the deduction with a SEP IRA. So if you're the only person working for your business, you use a SEP IRA, then you get a tax deduction for whatever you put into your account, your SEP IRA. Whereas with the traditional IRA, whoever owns the IRA gets the deduction. And so that might be just something to talk to with your accountant, or if you're sharp with numbers, you can kind of figure that out, which one makes more sense. I was just talking to somebody about this recently, and one way to think about it is how much money you're making. So if you're making too much money, well, that's with Roth IRA. So Roth IRA is a whole nother thing. We're not talking about Roth IRAs right now, but part of it's how much you're making with your job. So if you're only making so much money, it might just make more sense just to the traditional IRA until you're making more money. So again, you just need to kind of know your situation, know how much money you're making with your job. Are you with a small business? We're talking about somebody who's self-employed. That's what I think Aiden was asking. If you're self-employed, that's something to take into account. So yeah, and then again with the SEP IRA, you could just buy that Chipotle stock, like we were talking about earlier, and put it in a SEP IRA bucket or a CD or a mutual fund or whatever is best for you. So hope that helps with you, Aiden. And do we have any other questions here? Again, you guys can type those in the chat box. All right, guys, it looks like that's about a wrap then, so that's okay. Just to kind of wrap things up here today, everybody, you know, I just want to do what I can to bring good content to you all. So feel free to let me know if there's a particular video you'd like me to make, or something you'd like me to do here on YouTube. And please subscribe to the channel. I'm going to continue to put out videos, to try to provide value for you. Like this video, leave a comment. There was something helpful to you in this video about credit cards or debit cards or IRAs. And also want to invite you to there's a newsletter we do, the Money 101 newsletter, and I'm constantly looking for ideas, some things that are going to be helpful to you all, that to send you a newsletter about. And I only really send emails when I find something that I think is going to really help people, you're going to find valuable. So I'm not going to typically don't send them every week. Sometimes I'll send one every week. Sometimes I might wait a month or two or longer. So don't worry about me just flooding your inbox with all kinds of junk. I'm only going to send you something if I think it's something that I would want somebody to send me, something worthwhile about money or insurance, investing, entrepreneurship. So I'm going to drop a link below in the description box if you want to sign up for that. It's absolutely free, and we'll be bringing some fresh quality content to you there. And it's great to answer your questions today. I hope you all have a great day.